first part of the topic is research on financial market. Here I am comparing the three financial products, that is common stocks, bonds and preferred stocks, from the perspective of an investor. As there are two graphs which shows the comparison of common stocks and preferred stocks of Woolworths. It has 5-year trading data. On July 1993, Woolworths shares were at 2.45%. Investing 1,000 shares during that float would have saved an investor $2,450. The common stocks has rises comparing to 2016. Through comparing earning per share and shifts in share prices over time, we can get an idea how investor perspective have changed over time. Similarly, the graph of bonds have fluctuated data from 2011 to 2018. Woolworths have borrowed USD $550 million with the interest of 4.550%, which due date is at 4 December 2021. Coupon payment will occur 2 times per biennial. So this is the difference on common stocks and bonds. Thank you.
Hi everyone, my name is Santosh Neopare and my student ID is EMB24698, and today I'm going to talk about analysis of 5 basic principles of finances. And first one is money has a time value. Time value of the money is the concept of the value of each dollar to be received in future in less than the value of the dollar in hand at present. Well, Australia and New Zealand Banking Group Limited ANZ bonus interest is subject to eligibility, bonus and base rate, and are variable and subject to change on before and after the last business days of the calendar month or previous calendar month respectively. And the second one is there is a risk return trade-off. The potential return arises with the increase in the risks, which also means as higher the risks, higher the rate of return and vice versa. Cash flows are the source of value. The largest lines items in the cash flow from financing section are dividend paid, repurchase of common stock and proceeds from the insurance of the debt. Dividends paid and purchase of common stock are uses of cash, and proceeds from the insurance of the debt are the source of cash. And the next one is market prices reflect information. The investors react quickly to the market price depending upon the decision made by the manager. The price of the share increases and decreases accordingly. ANZ Banking Group Limited provides a range of banking and financial products and services in small businesses, retail, corporate, and the kingdom.
Hello, I am Dikshara Bandari Basnet. My student ID is KTM2443. My part in the presentation is about the fact-finding of the Australian bond market. In Australia, bonds are traded on one of the top exchange groups in the world named ASX. Bonds can be categorized by the type of interest they pay, like fixed rate bonds, floating rate bonds, and index bonds. They are also categorized as by the type of issuer, government bonds, and corporate bonds. A bond rating is the value of a debtor's credit or its ability to repay debt. There are currently 6 licensed credit rating agencies in Australia. Alphabetical indicator of AAA, AA, A, BBB, BB, etc. is ratings used for bonds in Australia. For example, Australian government bonds are assigned a highest credit rating of AAA. Talking about the differences between the Australian government bonds and corporate bonds, Australian government bonds are low risk for investment compared to corporate bonds. The government bond market in Australia is significantly larger than the corporate bond market, and there are a wide range of government bonds on issue. If an investor purchases a bond at par value or face value, the yield to maturity is equal to its coupon rate. While the buyer buys the bond at a discount, the maturity value will be higher than the coupon rate. A bond that is purchased at a high price will yield to maturity below its coupon rate.
My student number is PVS2283. I'm going to tell a presentation about fact-finding Australian share market. The name of listed stock market in Australia is Australian Security Exchange, an integrated exchange offering. Australian Security Exchange provide a full service which include listing, trading, and clearing, settlement, technical, and informative service. Uh, the oldest share index in Australia is All Ordinary Index, started in January. Today, the Australian Security Exchange has an average daily turnover of 5.6 billion and facilitates an average of 1.3 million trades. All Ordinaries Index is based and aggregates a market and values of a wide selection of the companies. The All Ordinaries Index is a summary measure of the movement of share value and is also considered a total market barometer for the Australian stock market and contains the 500 largest Australian security exchange listed companies by the market and capitalization and their liquid turnover on the exchange market. Looking at the figure from 2017 to 2019, the points for all ordinaries have risen from 5,750 points to 7,200 points. On December 2018, it fell to its lowest 5,600 points. The reason may be the Royal Commission, which came into full effect in late December 2017.
Hello everyone, my name is Sumit Khanal and my student ID is SBT2001. Today I'm going to be talking about risk analysis and project evaluation. And as you can see on my first slide, I have done the calculation for a net cash flow per year, and the formula would be cash inflow minus depreciation into 1 minus T plus depreciation. So calculate the net cash inflow per year, that was 37,50,000, and the net cash flows per year was 27,90,000. And calculation of the initial investment would be 24 lakhs. Going to my next slide, so I've calculated everything and put it on a small table. And if you look at the table, the first particular was calculation of NPV. The calculation of the net present value was 6956,184.69. Calculation of NPV when unit sale decreased by 10% was 606862.36. Calculation of NPV when price per unit decreased by 10% was 606862.36. And when variable cost increased by 10%, the NPV was 5891109.9. Fixed cost increased by 10%, the net present value was 69007112.04.
Hi, my name is Bona Guraga and my student ID is RI82534. Today I am going to present on the 3.2 section of the finance assignment. Let's start with what is NPV. The net present value is calculated in order to find the chances of risk within the framework of the company. The net present value not only helps in finding the company's amount of profit earned by the company, but also the amount of investment done. In the following assignment, it is found that the investment amounted to 38,310 after the cash outflow. This amount is considered as gain that arises from the investment made. NPV involves the amount of cash inflow, outflow, as well as amount of investment made. Assignment also asks for the break-even analysis for sales when a unit per sale is decreases by 10%. While calculating unit per sales decreases by 10%, sales break-even analysis is 8,800,000. Let's look what's break-even analysis. Break-even analysis is done by a company in order to find out the different financial tools that are helpful in earning more profit in the business. It is helpful in to find the fixed cost, variable cost, and the amount of the revenue. Company needs to focus on net present value and break-even analysis for achieving the profit margin of the company by reducing the risk. Both analysis help in finding the position at which profit can be earned by the company. In the following calculation, we could found that the net present value of the company and cash flow both are in positive flow.